anybody that is not able to join us, they can watch the recording. So the exercise that I had picked out for us, or the problem rather that I had picked out for us, is an accounting cycle problem. That's where we're going now in chapter 3. It's going to start us over very quickly in just one chapter and walk us back through the accounting cycle. So I just wanted to remind our brains of that. And this is a problem similar to what we would have seen at least one time in Principles of Accounting. But again, just to kind of remind our brains about it and know where we're going. Chapter 3 starts us back now at the accounting cycle. We walk through all the steps of the accounting cycle in chapter 3. So I thought that this would be a really good review problem for us. However, I planned on going to the computer lab and us working on it together Wednesday and Friday, but here we are. And so we'll get through what we can, and whatever we don't, we'll pick back up on next week. So the other thing I wanted to mention real quick, and I know we've got a few people in the process of joining right now. Hi there. Hi, guys. The other thing is, when we're done today, I will email this file to everybody so that you guys have a copy of it with the answers that we've entered in so far. Does that sound good? Okay. All right. So let me share my screen with you. And again, when we finish up today, I will email this Excel file to everybody so you'll have it. And then I also, like I said, I am recording this, so anybody that's not able to join us, but this is an accounting cycle problem. So we go from step 1 of the accounting cycle to step 9 of the accounting cycle. So again, whatever we don't get through today, if we don't get through all of it today, then we'll finish up together when we meet next week. But here's our problem info. So we're starting up here at the top, and here's all of our transactions for the month. So we've got Lula Plume, and I'll blow this up a little bit, actually make it a little bit easier to see, hopefully. So Lula Plume created a new self-storage business, Safe Storage Company. The following transactions occurred during the company's first month. And so it gives us, what do we got? 2, 4, 6, 8, 10 transactions that occurred during the month of July. And so remember, step 1, step 2 of the accounting cycle. Step 1, analyze the transaction. Step 2, journalize the transaction, right? And so let's do these journal entries. And you'll see on this Excel file, I've got all the problem info here. So it gives us, here are all of our chart of accounts. So all the accounts that we'll be using. And then here are the steps of the problem. So again, we're going to start by preparing the journal entries, updating the T accounts, preparing the unadjusted trial balance, right? Going through all of those steps of the accounting cycle. So the other thing I wanted to point out real quick, because this is something that's different in intermediate accounting than Principles of Accounting, common stock and dividends. So when we're talking about a corporation, as opposed to a sole proprietorship or a partnership, we call owner equity common stock or capital stock. Capital stock would be more inclusive, like capital stock would include common stock and preferred stock, right? But sometimes there's only one class of stock, that's common stock. And we call owner drawings dividends. So those are two differences. Remember, in Principles of Accounting, when we were talking about a sole proprietorship or a partnership, we called it equity, owner's equity, and dividends, we called them owner withdrawals or owner drawings. But again, in a corporation, those are common stock and dividends. So just kind of keep that in mind, and we're going to see that as we're going through this. So okay, let's get started on our journal entries. So the first one, July 1, Plume invested 30,000 cash and buildings worth 150,000 in the company. Okay, so we're going to debit cash, 30,000. We're going to debit buildings, 150,000. and we're going to credit common stock for the total $180,000 investment. Again, if you think about from principles of accounting, we would have credited owner capital, right? Part of equity. But in a corporation, common stock represents the owner's investment into the company. Okay, and then if we click here on our sheet, we can go ahead and record this in our T account. So we've got a debit to cash, 30,000. We've got a debit to buildings, 150,000. We've got a credit to a common stock for the entire 180,000. Okay. So we've prepared the journal entry, updated the T account. That, that's essentially getting us through steps 1 through 3 of the accounting cycle, right? Step 1, analyze transactions. Step 2, journalize transactions. Step 3, update the T accounts, right? So we did the journal entry, we just updated the T accounts. Are we all good so far? Any questions about what we're doing or where we're at? Is it looking okay? All right, all right. Okay, July the 2nd, and let me go ahead and put the date over here just so we're keeping track of them. So that's July the 1st. Now we've got July the 2nd. This one says, the company rented an office by paying $2,000 cash for the first month's rent. So we're debiting rent expense, $2,000, crediting cash, $2,000. And again, just like if we were using accounting software, we'd click post and it would update our T account. So let's do that. We're going to debit rent expense, $2,000, credit cash, $2,000. All right. Okay, what's this next one? July the 5th. This one says, the company purchased 2,400 of office supplies for cash. Okay, so we're debiting supplies, 2,400, crediting cash is what that one would look like. All right, let's click post and update our T account. So debit supplies, 2,400, credit cash. All right, so there are now our T accounts updated. Okay, the next one, what is the next one? July the 10th. This one says the company paid $7,200 cash for the premium on a 12-month insurance policy. Coverage begins on July 11th. Okay, so we're going to debit prepaid insurance, $7,200, credit cash, $7,200. And just real quick, again, I just want to point this out to you guys because this is going to come up in our adjusting entries. So the coverage began on July 11th. And so essentially when we get to our adjusting entries, we're going to have to make an adjustment based on 2/3 of the month, essentially, is how that's going to work out. But okay, let's click post and record this in our T account. So we've got debit, prepaid insurance, credit, cash. All right. What's our next one here? July the 14th. This one says the company paid an employee $1,000 cash for 2 weeks salary earned. Okay, so this is a debit to salary expense, $1,000. Credit to cash, $1,000. Oops, hot dog. We need one more zero there, Jess. Okay, and we're going to click post. We're going to update our T account. So we've got debit salary expense for $1,000. Credit cash for $1,000. Okay. What's our next one here? July the 24th. This one says, the company collected 9,800 cash for storage fees from customers. Okay, good. So we've got cash going up. We're debiting cash, 9,800. We're crediting revenue, which in this case, storage fees earned. That's our revenue account. And we just know that because it's right here in our chart of accounts. That's what they call their revenue account. So, okay, let's record this. We got a debit to cash, a credit to storage fees earned. I already forgot the darn amount, 9,800. Debit to cash and credit to fees earned. Okay. Looks like I need to insert a few, I'm going to insert a few rows here. Usually when I do this problem, I print it out. So I wasn't thinking about the amount of rows. Let's see, copy. Oh man. Didn't work too good. Let's see. Well, that gave us a few extra. Let's see, how many transactions do we have left for? We're going to need a few more. Okay. Sorry guys, I wasn't thinking about our I don't know what I keep doing wrong. It doesn't like me. Okay, there we go. Hopefully that's enough. Okay. What's our next one here? July the 28th. This one says the company paid 1,000 cash for 2 weeks salary earned by employee. Okay, so we already did this one back on the 14th. We know we have to debit salary expense for 1,000, credit cash for 1,000. We click post, we update our T accounts. We've got another debit to salary expense for 1,000, another credit to cash for 1,000. Okay, July the 29th is our next one. This one says the company paid 950 cash for minor repairs to a leaking roof. Okay, so we've got a debit to repairs expense, 950, credit to cash, 950. Again, we click post. We want to update our T accounts. Debit to repairs expense, 950. Credit to cash, 950. All right. Two more here. July the 30th is our next one. The company paid 400 cash for this month's telephone bill. All right, so this is telephone expense. We're debiting telephone expense, 400. Crediting cash. All right, so we want to click post. Oh, hot dog. Update our T accounts. Debit telephone expense. Uh-oh, where's it at? There we go. Debit telephone expense, 400. And then credit cash, 400. All right, and one more, July the 31st. 2,000 cash dividends were paid, so we're going to debit cash dividends, 2,000, credit cash, 2,000. All right, we go back here to our T accounts. We got a debit to the dividends, credit to the cash. All right, let me zoom out of this for a second. So there, oh, that's a little bit too far. So there are our transactions, right? The 10 journal entries. And we updated all of our T accounts. So step one of the accounting cycle, we analyze the transactions. Step 2 of the accounting cycle, we journalized the transactions. And then step 3 of the accounting cycle, we posted the transactions to the ledger accounts, AKA T accounts, right? So we've went through the first 3 steps. Any questions about those so far? Okay. Okay, good. I'm glad that everyone is doing good with it and we remember this, hopefully from principles of accounting. Okay, so now what we need to do, we need to calculate our balances in the T accounts, and then use that information, those balances, to prepare the unadjusted trial balance, right? So the balance in cash, and really cash and salaries expense are the only two that had more than one transaction. But to get the balance in cash, we're going to take our debits. So we add the debits and then minus our credits. So we subtract all of our credits. And of course, we know that if we're good with Excel, that there's other ways that we can do this, right? Some functions and things like that, but just to show us what we're doing, adding, subtracting. So we got an ending balance in cash of $22,850. All right, we don't have anything in accounts receivable right now. We've got a balance in supplies of $2,400, prepaid insurance $7,200, buildings $150. We don't have anything in accumulated depreciation yet, nothing in salaries payable yet. We've got 180,000 in common stock, 2,000 in dividends, 9,800 in fees earned, and then we've got a few different expenses here. Salary expense, rent expense, repairs expense, telephone expense. We could go ahead and add up salaries expense if we wanted to, but it's easy to see it's 2,000, so it's not a big deal. Cash is the one, you've got the most ins and outs, so it's helpful to foot the balance. But okay, so then let's prepare our unadjusted trial balance here. So I've already got the financials set up. Let me zoom out of this real quick and I can show you a little bit how I've got this formatted for us. So I've got the income statement format, the statement of retained earnings. Again, we don't call it owner's equity. It's stockholders' equity, right? We prepare a statement of retained earnings. That's what relates most closely to that statement of owner's equity, is the statement of retained earnings. And then we've got all of our balance sheet stuff here. And then our trial balances. Remember that we've got 3 trial balances in the accounting cycle. The step 4 of the accounting cycle is the unadjusted trial balance. Step 6 is the adjusted trial balance, and then step 9 is the post-closing trial balance. So again, just to remind ourselves of that, but we are zooming in right now on the unadjusted trial balance. That's what we're preparing right now. Okay, so unadjusted because we haven't done any of our adjusting entries, okay? All right, so cash, we could just say equals, click back over here to our T accounts, select that cell, enter, and it populates it for us. Accounts receivable, we didn't have anything yet, but again, office supplies, we can just say equals, click back here to our T accounts, 2,400, populate that number for us. Okay, prepaid insurance equals, click back here to our T account, 7,200, enter, populates that for us. Buildings, again, equals, we click back to our T accounts, select that cell, press enter, populates that. We've got nothing in accumulated depreciation yet, so that's a 0. Remember, accumulated depreciation, though, it reduces the book value of the building. It reduces the building's account, so it has a normal credit balance. Okay, salaries payable, again, we don't have anything in there yet. Common stock, If we go back here, we could say equals, we go back to our T accounts, we got 180,000 in there. Okay, dividends, just like owner drawings, dividends have a normal debit balance, so equals, go back here to our dividends, all right. Storage fees earned, remember this is our revenue account. Revenue has a normal credit balance, so equals, we click back on our T accounts, here's our fees earned, all right. And now all of our expenses are what are left, right, on this trial balance. Okay, we don't have anything in depreciation yet. Remember, we do have salaries expense though. So salaries expense, we'll have to say equals this plus this, right? There's our 2,000. Okay. Insurance expense, we don't have anything in there yet. Rent expense, we do though. We can say equals, we go back to our T accounts, rent expense. We don't have anything in supplies expense yet. We do have repair expense and telephone expense. So repairs, we'll say equals, we'll click back here. Repairs expense, 950. And then telephone expense equals, go back to our T accounts, and here's our telephone expense. Okay, so there is our unadjusted trial balance, right? We've got all of our accounts that have balances, whether it's a debit balance, it's put on the debit side, or a credit balance, right? So we just need to make sure debits equal credits. So equals the sum. And we're going to start here. We're going to drag it. We want to include all of these debits. Okay, so 189,800 on the debit side. And we can actually see that that is what's on the credit side as well. But I'm going to go ahead and just enter the formula. 189,800. Okay. So again, unadjusted trial balance, step 4 of the accounting cycle. Is that looking good to everybody? Any questions where we got our numbers yet? Okay. All right. So then let's go ahead. Now the next step, step 5 of the accounting cycle, is our adjusting entries, right? Our adjusting entries. So we need to do our adjusting entries, and then we need to update the T accounts. And then once we do that, we can prepare this adjusted trial balance, right? The adjusted trial balance is prepared after the balances have been updated from those adjusting entries. So let's go back to our problem info. And so these were our regular transactions. Now I'm going to make a column for adjusting entries. Okay, so now we've got our adjusting entries. And then just to make it a little bit easy, I'm going to just hide these for right now. I'll unhide them before I send it to you, but I'm going to just hide them for right now so they're not in our, which, you know what, though, actually, hold on one second. I just rethought that because actually our adjusting entry information is down here. So let me go ahead and just put this. We'll do our adjusting entries a little bit further down. We'll do them right here, because here's the information for the adjusting entries. And let me highlight this so we know what we're looking at as we're going through, right? Here's the information for our adjusting entries. So these were the steps of the problem. So prepare the journal entries, post them to the ledger accounts, prepare the unadjusted trial balance. We've already done step 1 and 2, right? We've already completed step 1 and 2. Now we're on step 3, prepare the adjusting entry. So adjusting entry number 1, this one says 2/3 of 1 month's insurance coverage has expired. So remember, if we go back up and we look at this, our insurance coverage began on July 11th, right? Coverage began on July 11th. And our insurance was 7,200. Here's the transaction. And that was for a 12-month policy. So really what we need to do to calculate our expense, we need to take 7,200 divided by 12. That's going to give us the monthly. So 7,200 divided by 12. So our insurance is $600 per month. But again, coverage began on July 11th. So we were only covered for 2/3 of the month. So now we multiply this by 2/3. So we're going to have an expense of $400 for 2/3 of the month. Okay. So if we go down here to our adjusting entries, we're going to have debit insurance expense. Whoopsie. Debit insurance expense. 400. Credit prepaid insurance 400. Okay. And just like with our normal journal entries that we did for the July transactions, we want to just post these as we're going. So we've got a debit to insurance expense, a credit to prepaid insurance. Okay, so here's our insurance expense, debit to insurance expense, credit to prepaid. And now that we've done this prepaid adjusting entry, we can calculate our remaining balance in there equals 7,200 minus the 400. So prepaid insurance after this adjusting entry's got a balance of 6,800, right? Okay, let's go look at our next one. All right. Adjusting entry. Oh, you know what? This is letter A, not number 1. Okay, letter B. Letter B, it says at the end of the month, 1,525 of office supplies are still available. Okay, well, let's go up and see what did we have. So we had, here's our supplies transaction. We had 2,400 and I'm just, whoa, holy smokes. I'm going to put it here. So we had 2,400 and now we get to the end of the month. We only have 1,525 left. All right, so what did we use? So we take our 2,400 minus 1,525. So we used $875 worth is what we used. So we're going to debit supplies expense for $875, credit the supplies asset account, because we want to reduce that asset by the amount that we used. Okay, let's go. Let's click post. Let's post this to our T account. So debit supplies expense for $875 and then credit that supplies asset account. And that's kind of toward down the bottom here on our assets, $875. So again, we can calculate, since we've done our adjusting entry, that our ending balance now in supplies equals our 2,400 minus 875. So 1,525 is that ending balance now in supplies. Okay. All right, let's do letter C. This one says this month's depreciation on the buildings is 1,500. Okay, they're not making us calculate anything here. They're giving us the amount. That's fine. The entry, the adjusting entry is debit depreciation expense, 1,500. Credit accumulated depreciation, 1,500. All right, let's post this. So we've got a debit to, here's our depreciation expense, 1,500. And then we've got a credit to accumulated depreciation, 1,500. All right. Letter D. This one says an employee earned 100 of unpaid and unrecorded salary as of month end. Okay, so we're going to debit salary expense, 100, credit, salary payable, 100. Let's post this real quick. So we've got a debit to the expense of 100, a credit to the liability of 100. And, I'm going to go ahead and add these up in salary expense. I know that we can see it's 2,100, but just to make the amount stand out. And I should have made this T account a little bit bigger, but that's okay. So we know that this is our salary expense total. And we credited salaries payable. Okay, we're good with that one. All right, last adjusting entry. The company earned $1,150 of storage fees that are not yet billed at end of the month. Okay, so we need to enter this into our accounting system. We need to bill them. So hopefully you remember when our customers owe us money, we call that accounts receivable. So we're going to debit accounts receivable, $1,150, credit storage fees earned, aka revenue, right? So debit accounts receivable, credit storage fees earned. So here's that AR account, and then credit fees earned. And now we can total these up, since we do have 2 in fees earned now. Total them up. So we've got total fees earned 98 plus 1,150, so 10,950 now in fees earned after our adjusting entries. Okay, and those were all 5 of the adjusting entries. We updated the T accounts as we were going. Again, that's step 5 of the accounting cycle. Do your adjusting entries, update T accounts. And so that was step 5. Any questions about the adjusting entries? Hopefully making okay sense to us. Okay. Well, it sounds like that everybody's feeling good about it. So that's awesome. So then last thing we're going to do together today, and like I said, we'll finish up the problem when we come back together next week. We're going to prepare this adjusted trial balance. The adjusted trial balance is step 6 of the accounting cycle. All right. So just like I did before, I'm going to just keep going back to the T accounts and selecting the amounts from there. So cash, we've got a debit balance, $22,850. All right, accounts receivable equals, we click back to our T accounts, debit balance of $1,150. Office supplies, now we go back to our T accounts, $1,525. Prepaid insurance, we go back to our T accounts, that now has $6,800. Buildings, we go back to our T accounts, we've still got 150,000 in buildings. All right, so remember, accumulated depreciation has a normal credit balance, right? Because it reduces buildings. Buildings are an asset. Assets have a debit balance. So this contra asset account, accumulated depreciation, it has a normal credit balance, okay? So equals, we go back to accumulated depreciation, 1,500. All right, salaries payable, also normal credit balance. We go back, we got 100 in there. Common stock, normal, again, like equity, normal credit balance. We've got 180 there. Dividends, though, decrease equity. And so dividends have a normal debit balance. We go back here, we got 2,000 in dividends, okay. Storage fees earned, this is our revenue account. Revenue has a normal credit balance. So we click back here, we got 10,950 now in revenue. And then all the rest of these are our expenses. And we know expenses have a normal debit balance. So we click back here, depreciation expense, all right, salaries expense. Just getting the information right from our T accounts. Insurance expense. Rent expense. Office supplies expense. Repairs expense. And then lastly, that that telephone expense. Right down here at the bottom, our last expense. Okay. So there is our adjusted trial balance, right? So the trial balance after we have updated balances for the adjusting entries or after the adjusting entries. And so last thing, we just need to total this up. We need to make sure it equals. We want the sum of all the debits. And then equals, we want the sum of all the credits. And we can see they are in fact equal 192,550. So that takes us through step 6 of the accounting cycle. And we'll go ahead and stop there. Step 7 are the financial statements. Step 8, the closing entries, and then step 9, that post-closing trial balance. So, you know, the financial statements will take us a little bit of time, and I want to be able to, you know, remind us what those closing entries and stuff look like. So again, we'll finish up. That takes us through step 6 of the accounting cycle. We'll finish up this problem together when we come back on Wednesday. We'll be starting chapter 3. So I'm going to go ahead and save this and then send it to you guys. Let me stop sharing my screen. Hi there. All right. So I don't know if you guys remember that problem from Principles of Accounting or not. I used the same problem. I just changed like that common stock and dividends name of it. So depending on how good your memory is or how long ago you took Principles of Accounting, you may or may not remember it. But was it looking okay? Familiar to us? We're feeling good about it? Okay. All right, good. Well, like I said, guys, I will email you a copy of this with what we've done so far. And then when we come back together next Wednesday, we'll finish it up, okay? All right, guys, enjoy your weekend. Have a good holiday. Bye-bye. Bye-bye.